Hey guys, Adam here from DirectionTrader.com. Let's do today's mid-morning looking forward video. It is Friday, March 7th, and it's right at 9 o'clock on the West Coast time. So, right in the middle of the morning here, guys. Very interesting. We had job numbers come out today, and as expected, you've seen a couple different little rallies and pullbacks and whatnot in the market, but bottom line, let's just look at the dailies and see where we see this market going from now over the next over the next couple days, starting on Monday, Tuesday. What can we look for in the different instruments? I'm going to go over all four of the stock index futures here, starting with the S&P. You see the S&P is kind of just holding a little bit higher here. We've made this nice push. Look in yesterday's video, I have a projection up here. A very aggressive projection up here at the 1940s. Now that is simply just a technical analysis leg from the most recent anchor leg with a full target up at 1940. I don't expect that to happen in the next week or so, but that's something over time that we could look for. Let me quickly go over and show you something. Basically, all the indexes are they're sideways for the day. We had this nice little push here when the jobs number came out, and we've done nothing but pull back ever since. Now we're back in the mid-range, coming back up into the mid-range today where the market opened. But let me go down here and show you something kind of interesting here. As you see, the S&P has pushed higher and into all-time highs. The NASDAQ is also up here into all-time highs territories. The Russell, we know, is in all-time high territory, but the Dow is not. The Dow is one that's not, and not uncommon. The Dow is actually the stronger market of today. Now, it's got the exact same look as kind of the other ones, but it is holding a little bit stronger above yesterday's highs where the other ones are not. That's to be expected. As you see, the Dow still trying to get up and retest them highs. Up in the all-time high area, but nonetheless, they all look exactly the same. But I want to show you, in retrospect to where their moving averages are and where the support is, what I see moving forward here. I see this, the Dow getting up here near the all-time highs. We can see that tested, and if we do get a rally, any type of break above them highs would be an awesome buying opportunity for anybody looking for some swings. If we get a little pullback, which is what could happen here, look for the 8-period moving average to get tested here on the Dow. If you like to trade the YM, look for this 8-period moving average. It's my faster moving average. It tends to hold the market on a regular basis. As you look back in time, anytime you see a sell-off, it tests that 8-period moving average. It tests that 8-period moving average over and over and over, and it's done that throughout this entire rally. If it doesn't test the 8-period, it'll test the 21. But nonetheless, right now the Dow is actually the stronger of the four, simply because it has actually been the weaker of the four. It has not broken through all-time highs yet. So let me go over and show you what I think on the S&P. It's going to be about the exact same analysis, but I just want to go ahead and put it out here and show you what I'm looking at. As you see here, I got this 8-period moving average because it seems to be a holder of these markets on a regular basis. Simply look at this sell-off here. As it sold off, we held the 8-period, and then once we broke back above it, we have held it numerous times all the way up here. So the 8-period will always tend to be a little bit of a magnet whenever we need a pause. And that's that's kind of happening right now. We've kind of gotten extended away from the 8-period moving average here. Get a little extension. The market needs a little pause, and so I'm going to sit here and wait for it to come back and retest that 8-period. And if we come back and retest it, that'll give me opportunities to look for the smaller time frames to maybe look for some reversals and some buying opportunities from an intraday standpoint. Then on the other side, anything that breaks the highs, guys. Anything that breaks the highs, I am looking long. As I keep on talking almost on a daily basis, anytime we break new highs, guys, I'm looking for continuation. I'm looking for further follow-through. It's worked for the last few years, and I'm going to continue to do it until it fails, or until we get up in the 1940 area where we're extremely exhausted, where the price level is, where the target is currently based on yesterday's video. So right now, guys, I am flat the market. I have nothing, no positions on right now from an intraday standpoint, and I'm waiting for the S&P to come back and retest the 8-period moving average. If not, I will sit on hands until we can break through the highs. Once we're able to break through them highs, then I'll be looking for more positions to the long side. Don't know if that's going to happen today. Simply based on the market's reaction. And it is Friday, guys. It's lunch on Friday. Things really go dead. So maybe the end of it for me, which is fine because we've had another good week, guys. Another good profitable week. Had a great webinar this week on Wednesday with Infinity Futures. I'd like to thank them for hosting that and having me. I've got tremendous feedback, guys. So I just want to thank them, but not a lot in the markets right now. I'm looking for a little bit of a break here, and basically come Monday, I'm looking to see if we can push higher. If we can, that's great. If we're going to take a little pullback, that's fine too. That'll give us a little healthier bounce and a little more of a kind of a retest and an opportunity to get long again. So. Not a lot in this video today, guys. Just kind of keeping you up to date on what I see and what I'm looking for. But moving forward, if you guys have any questions, email me adam@directiontrader.com. If not, thanks for watching, and I will see you in Monday's video.